if you look at the last maybe 5 years or so, despite all of this inflationary policy that caused stock markets to soar and eventually crash, gold sort of didn't go anywhere.
Well, I don't know, man. It's a little bit of a game. People, anybody can pick your entry point and your exit point and compare it to asset classes and make one the winner and one the loser just by conveniently picking your entry point. So I'm going to conveniently pick mine and say in 1999, say 2000 approximately, gold was $250 an ounce. In August 2021, it hit an all-time high of $2,070 an ounce, 2,069 approximately. So that's a 9 times increase, 900% gain in 23 years. So maybe the stock market went up more than that. I'm not going to dispute that, but it's just incorrect to say that gold hasn't gone up or it hasn't held its own. I would say gold doesn't change. What happened was the value of the dollar went down. So it took more dollars to buy your ounce of gold. But, that's just two sides of the same coin, no pun intended. But so gold has done quite well. And it's volatile. One of the most interesting conversations on the topic I've ever had was with Jim Rogers. I'm sure the viewers know who he is. He's one of the greatest, most famous commodities traders of all time, original partner, George Soros, professor at Columbia University, but one of the great traders in all asset classes, but particularly commodities. And I see, this was 6 or 7 years ago, probably around maybe longer, might have been around 2010. So okay, maybe 12 years ago. But he owns a lot of gold. He wasn't selling, but he wasn't buying at the time we had the conversation. And he said, Jim, gold's going to the moon. He said, that's clear. But nothing goes to the moon without a 50% retracement along the way. And so gold in August 2011 was just about $2,000 an ounce, like 1,900, a little more. So just call it $2,000 an ounce for a round number. In December 2015, it was $1,050 an ounce, 1050. So, and if you use 250 in 1999 as your base, so you 250, make 250 zero, in other words. So from 250 to 2000, so that's $1,750. 50% retracement would be about $850, a little bit more, which would put it at about 1050. So it was almost exactly, and Rogers told me this before this happened, before everything I'm describing. So we had our 50% retracement, and he was right. I was buying gold at the time, but I stopped chasing around. Maybe I might have bought some at 1,300 at the time, but I didn't chase it up to 2,000. It looked like a super spike, kind of bubbly move to me. But I always remember when he said that, and because at 2,000, everyone's like, it's going to 3,000. But he said, no, you have to have that kind of retracement, flush out the weak hands, set up the foundation for the next rally. Well, we've had it. We had it between 2011 and 2015, and gold has almost doubled since that interim low in 2015. So gold's volatile, goes up and down. It's not get rich quick. It does its job. But I expect now we're at a platform or a level where it will go significantly higher. And we're talking, $5,000 an ounce. But I always say, look, it's got to hit 3,000 before it gets to 5,000. So, maybe 3,000 is enough of a forecast.